Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so I'm very sure that if you are into the trading business, then you must have come across a lot of theory related to the gaps, but I'm not sure how you would have tackled it or how you would have implemented those gap theories when it comes to the live market. I mean, we know that there are various type of gaps and that each of those gaps, or I would say each of those gap theories have their own relevance and stuffs like that. Okay, like for example, we have the runaway gaps, we have the breakaway gaps, we have the exhaustion gap, and we also have the normal gaps, right? And each of these gaps have their respective usages on the charts. So basically, a gap is formed when the closing price of today and the opening price of tomorrow are at different price levels. And depending on these very price levels, we decide whether the stock has opened gap up or gap down. In fact, let's not talk about these kind of theoretical stuffs in this video because I have already made a video that explains everything about the gap theory. And if you are interested, then please feel free to search around in my YouTube channel and go through that particular video to gain some more knowledge or cognizance on the gap theory. Okay, now coming on to this video, the reason behind making this video is to make you guys aware about a particular indicator that will end your struggle to find the gaps that are being formed on the charts. Okay, now again, doesn't matter what kind of a gap is being formed on the charts, the baseline is the gaps do work as very strong supports and resistances when it comes to trading. And because of this very reason, the traders are always interested in spotting the gaps that are being formed on the charts. Okay, I'm sure many of us would be struggling to find the gaps manually on the charts, but post watching this video, I'm sure that this struggle of yours should end. Okay, so without wasting any further time, let's get on to the charts here. Okay, so this platform that you see on the screen is TradingView. That is the one which I always use 100% of the time in order to do my technical analysis. Okay, and as you can see here, the green lines that you see here are being formed. These are the gaps that have been detected by this particular indicator. Okay, and on the right hand side, you might be seeing Nifty, Tata Elxsi, Bajaj Electricals, Tata Steel, and Tata Chem. These are the stocks, these are the best scenario stocks that I have selected just to explain the stuffs about the gap theory. Or I would say not to explain the stuffs about the gap theory, but rather to show you how this particular indicator works out on the charts. Okay, so uh, on the left top corner, you might be seeing something called as the gap detector. That is the indicator that I'm talking about. Okay, so if you are into the TradingView terminal or the platform, you need to get on to the indicators section. Okay, then click on public library. The reason why we are clicking on public library is because this is public. So anybody, any trader or anybody who is using TradingView and creating a particular indicator or oscillator, they can post their inventions here. So basically, TradingView makes use of the Pine scripting. So if I am a guy who has created an indicator, who wants to create an indicator, then I have to make use of the Pine scripting to create that particular indicator. Okay, that is the reason why we need to go get on to the public library. So once you click on public library, get on to the search bar, click on it, and type in gap detector. Okay, and these things will come up on the right hand side pane. The one which you need to select is the first one, gap detector. The name of the author or the guy who has actually created this particular indicator, his name is I don't know how to pronounce it, but it's ASCH. Okay, and right now at this particular point in time, the number of followers, or the number of followers, you can say, are 857. Okay, so this is the one. Forget about the number, just remember this particular name, ASCH and a dash. That is the name of the guy who is the creator of this particular indicator. Okay, so in order to plot it on the chart, you need to just click on it, and that will plot it on the chart just like this. Okay, and then you can close this particular window. Now, there is a little bit of a change that you need to do on that particular indicator. In order to do that, you need to go to settings. Okay, you need to go to style. So there are three tabs: inputs, you don't have to make any changes here; style, under style you need to uncheck the labels checkbox. Okay, if I show you what difference does it make on the chart, see the chart here, there is nothing mentioned here, right? The moment you check this, you get something written here on the charts, right? Like bull gap, bull gap, bull gap, all with some numbers. Okay, so that is something which will create confusion. Okay, and we really don't need that to be read. Okay, that is the reason, under the style tab, uncheck the labels checkbox, and this thing will be gone. Okay, under visibility, you don't have to make any changes. That particular guy, he has not given any uh, option for us to change the colors and color of the line and stuff like that, which is absolutely okay, because we are not into colors, we are into finding the gaps, and this particular thing exactly helps us in doing that. Okay, so no changes in inputs and visibility. Under style tab, just uncheck the labels box checkbox. Okay, and you click on okay. And once that is done, this is how it looks like. Okay, this is how you plot the gap detector indicator on your charts. Okay, now let's get on to some of the best case scenarios as I was discussing. So this is Nifty Spot. Okay, this is the chart of Nifty Spot. It is in a 1 day time frame, as you can see here. Okay, and wherever it has a gap, the indicator has drawn a line here. Okay, so if I expand it a bit, right here, the gap was formed, so we got the line here. Here another a gap was formed, a line here. Again on this day, the gap was formed, so again a line here. Okay, likewise there will be many gaps which will be formed. If you want to see them, let me reduce the size of the candlesticks and let me squeeze them a bit. Okay, see here, these are the gaps. If you move towards the left hand side of the chart, see here, these are the gaps which have been formed. See here, there's one gap here, there's one gap here, one gap here, one gap here, one gap here, one gap here. So I believe you're getting the point, right? So these lines you will see wherever a gap is being formed. If there is no gaps formed, these lines will not be formed. Okay, that is the name. That is why it is the name. The name of the indicator itself is gap detector. It detects whenever a gap is being formed. Okay, there is one more point to it which I will come at the end of the session. Okay, one thing that needs to be known here when it comes to drawing the gaps here, that I will cover when I'm about to end the video. But as of now, just be mindful, or just have a look that this indicator allows you to find the gaps easily. Okay, whenever they are being formed on the charts. Okay, let me make them a bit bigger so that it can be clearer for you. Okay, now moving on to the next one, Tata Elxsi. As you can see here, Tata Elxsi formed a gap here between 29th of June 2021 and 30th of June 2021. So it was a gap up opening, and since the gap was formed, this particular indicator drew a line for that particular gap. Okay, let me expand it here. Okay, and if you want to talk more about this particular thing, if you remember, I told you that the gaps do work as very strong support and resistances, right? So as you can see here, the gap was formed, and the script price went up, right, and retested this particular gap for around 4 to 5 times, right? This was one of the tests Okay, second time it was testing here, third time it was testing here, fourth time it was testing here, right? So gap in this case in Tata Elxsi, the gap up which was formed here is working as a very strong support, because of which Tata Elxsi is not coming down. If it breaches this particular support and closes below it, then we can expect Tata Elxsi to be moving down. Okay, so it was retested almost for 4 to 5 times here. That is how strong the gaps are. Okay, and it's not necessary that it has to test exactly at the gap. Okay, when it comes to the charts, as you always know, nothing is perfect in trading, right? So we cannot expect that it will touch the gap and then only it will go up. No, it can come very close to the gap, then it can also go up, the way you see it here, right? So it came very close to the gap, went up. Again, it came more closer, went up. Again, at the same levels, went up. Here again, at the same levels, went up. Okay, so here in this case, the gap is working as a very strong support, right? Moving on to Bajaj Electricals. Here again, the gap was formed here, right? And this has been again tested for 4 to 5 times. First test, second test, third test, fourth test, fifth test. Again, Bajaj Electrical, this particular gap is providing a very strong support to Bajaj Electricals. Okay, similarly, Tata Steel. Okay, Tata Steel is a different scenario because the gap has been formed on the downside. Okay, and whenever the gap is being formed on the downside, you will see the red lines, and whenever the gap is formed on the upside, you will see the green lines like this. Okay, so a gap up will be a green line, a gap down will be a red line. Okay, and you can see here how beautifully this particular gap down is working as a resistance, right? So here this gap is working as a support, and here this gap is working as a resistance. So just by seeing the charts, you can very well anticipate that Tata Steel will move down further. Okay, so the first target will be somewhere near to these lows. If this low is breached, right, this can also be considered as a support, right? If this support is breached and it closes below this support, then the next target can be this particular support level. Okay, just a hint for you guys. Similarly, if we move on to Tata Chemicals, again, it is providing a very good support here. So the gap was formed here, went up, moved back to the gap, which is working as a very strong support, moved up again moved down back to the gap, got a support and moved up again. Okay, so basically this is a consolidation that is going on right now. Okay, unless and until this particular level is breached and the candlestick closes above it, we cannot be sure that this guy will go up. Okay, so wait for this particular resistance to be breached and then you can be long on Tata Chemicals. That is how you read the charts, a very basic reading, but again, this is what works in the market. This is what moves the market, right? The supports and the resistances. Okay, so I hope you got the point, guys. Okay, now if you remember, I was talking about one point that I would like to discuss by the ending of the video. That particular topic is, it does this particular indicator does not uh, does not draw for all the gaps. It does not detect all the gaps. It detects only it detects or shows only the gaps that are not closed. And again, the closure of a particular gap is in itself a different topic, which is not in scope of this video. So maybe I will make another dedicated video in regards to the gap closures. Okay, but as of now, just be mindful that this particular indicator only shows the gaps which are not filled. Okay, so if you ask me what do I mean by gap filling, let me quickly show you what do I mean by that. See here. Here also a gap was formed, right? Between 17th May 2021 and 18th May 2021. So 18th May was the day when Nifty Spot opened gap up, right? So here is a clear gap between the 17th and 18th of May 2021. But this particular indicator did not draw the green lines here. Why? Because this gap was filled by this particular candle, these two candles. right? So the 19th of May and 20th of May 2021, on these 2 days, this particular gap was filled. That is the reason why the gap detector indicator did not draw the green lines here. I hope you are clear on this. Okay, so this particular indicator will only show you the gaps which are not filled yet. If a particular gap is filled, then it will not show you that gap. Okay, and why it will not show you that gap is, as I said, it is a completely different story. It falls under the scope of something called as gap closures. Okay, maybe I will make another video on that. Okay, but as of now, this is something which you should be aware about. Okay, so yeah, as you see, it's really a handy tool that can be used to spot the gaps, and then you can spot the support and resistances along with some other technicals to decide your trades. Okay, and please be mindful that just because I have mentioned that the gaps work as good supports and resistances, you should not be taking up the trades blindly the moment you see a gap forming. Okay, it's not that easy. And if that would have been so easy, then everyone out there would have been making money, right? So there are many other things that needs to be taken care of, and the gaps, of course, can be used as one of the major influencing factors. Okay, but again, there are many other things that has to come into picture. Just gaps, just by seeing the gaps, you cannot anticipate the stocks move. Okay, so please be mindful about it, and act wisely accordingly. All right, so that's it from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right of the on the top right corner of this video, and the eye symbol that you see there, you can click on it and watch my previous video. And as always, would request you all to like and subscribe to my YouTube channel, and also please do not miss the ending of this video, as you might get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. Okay, so that's all from my end, guys, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.